Welcome back, everybody. We're diving into the world of Forex today. Our listeners sent over a Forex training guide, and
Yeah,
it's pretty extensive.
it is, yeah.
They really want to understand how this market works. So what we're going to do is pull out the key info
Yeah.
and give you the cheat sheet version of
What?
Forex
Yeah.
trading. Most people kind of have an idea of what Forex is, but
Right.
maybe not how it's different from something like the stock market. What do you think?
Yeah, definitely. They're both trading, but Forex is a completely different animal when you look at the
Yeah.
scale and speed of it.
Right, right.
I mean, you're talking about
Yeah.
trillions of dollars moving every single day, all across the world, different time zones.
Yeah, it's a constant.
Yeah, so it's like
Mm-hmm.
the guide compares it to driving a manual transmission. You got to be much more,
Oh,
hands-on and really in tune with
Right.
what's going on compared to, an automatic.
right. You can't just set it and forget it.
Yeah.
With Forex.
Not at all.
And that brings us to volatility, which is a
Yeah.
big one with Forex. This market moves
Yes.
fast, and it can be tough to predict,
It really is.
which is why this whole idea of
So,
currency conversion
I think-
is so important. It's not just about
yeah.
knowing how many dollars you get for a euro. It's about understanding those little tiny
Yes.
fluctuations, the
Yeah.
decimals that can actually
Yeah.
make or break a trade.
Absolutely, because that's where the pros,
Yeah.
they look at those tiny changes to
Right.
see like which way the winds are blowing.
Gotcha. I see. And the guide, it gives an example of $1
Right.
equals 117.456
Yeah.
Japanese yen.
Yep.
That's so specific.
It is. And it's specific for a reason, because those little changes,
Uh-huh.
those can actually be
Right.
the signals that someone's
Yeah.
going to find an opportunity to,
Okay.
buy low and sell high.
So we've got this crazy fast-paced market. We got to watch every little tiny decimal change. How do people even wrap their heads around
Right.
all of this information? I mean, it's got to be overwhelming.
Well, that's why we have things like candlestick charts. They're like
Well-
visual shorthand to understand these trends.
Okay, and this is where the guide gets kind of visual, right?
Yeah.
Talks about bull markets
Yes.
and compares it to
Pamplona.
the running of the bulls in Pamplona, Spain.
That's right.
So it's exciting, potentially lucrative,
Yes.
but also risky.
Very risky.
Yeah. And then, of course, you have
Thank-
bear markets, which they compare to
Being chased by a bear.
literally being chased by a bear.
Yep.
Which, again, scary, potentially dangerous,
Absolutely. Yeah.
but, also maybe some opportunities there. Could be. So I like those visuals. I think it helps kind of make
Yeah.
sense of things. And those candlestick charts, it sounds like they're a really important tool. They help you see those patterns and predict where prices are headed. Now, speaking of market trends, let's get into devaluation
Okay.
and depreciation.
Yeah.
This
is a good one.
they sound similar,
Right.
but they're not the same thing.
Right. And this is where the car analogy comes in.
Okay, so a new car right off the lot
Yep.
loses value,
Right.
right? It's depreciation.
Yeah, exactly. It's
It's
just
expected.
yeah.
But if the government, let's say, came out and said, your car is now worth half
Yeah.
what it was, that's devaluation.
Right. A deliberate
It's a very intentional move. So
to
devaluation,
lower its value.
government controlled, depreciation, market forces at work. And that is really
Yeah.
important to understand the difference.
Absolutely.
Because it's going to affect
Right.
traders in different ways.
For sure. And this ties back into that whole volatility thing we were talking about.
Right.
Currencies
They're constantly
moving, yeah, influenced by all sorts of things. The economy, politics.
Mhm.
It's like driving in unpredictable traffic.
Ooh. You got to be,
God.
you got to be on your toes
Yeah.
to avoid a crash.
And speaking of avoiding crashes, let's talk risk management.
Yeah.
This short selling thing that the guide talks about
Yeah.
sounds a little
risky.
like you're betting against the market,
It can be,
which is kind of scary.
but it can also be really powerful
Okay.
if you know what you're doing. So basically what you're doing is
Yeah.
you're borrowing an asset, in this case, a currency.
Yeah.
You're selling it at the current market price.
Okay.
And then you're hoping the price goes down so you can buy it back at a lower price, return it to the person you borrowed from,
Okay.
and keep the difference.
So you're making money when the value goes down.
Exactly.
That's
So it's a way to potentially profit when things are falling.
interesting. But of course, risky, right?
Oh, for sure. I mean,
Because if it goes up, if the price goes up,
you're in trouble.
you're going to lose money. Yeah.
So this is where risk management
It's
is
just so
so key. You got to have a plan.
You got to have a plan.
The guide mentions these limit orders,
Limit orders.
which I think
Yes. It's kind of like
to be
setting a budget. They're
Right.
telling the market, hey, I'm only willing to buy or sell at this price.
Right.
So that way you're not risking more than you're comfortable with.
Right. Okay. That makes sense.
Yeah.
Like a safety net.
Exactly.
But then the guide talks about whipsaw, which sounds like even if you're careful, things can go wrong.
Well, unfortunately, yes. Because whipsaw is when the market just suddenly reverses direction. And you get caught off guard, kind of like being in a fender bender, even if you're driving carefully. It just,
So even with all the planning,
yeah,
there's always that.
there's always that risk. Which is why, discipline and emotional control are just as important as all the technical stuff.
Okay.
Because you got to be able to stick to your plan,
Wow.
even when the market's going crazy.
So we've covered some of the Forex basics here.
Yeah.
Volatility, currency conversion, risk management. Now let's get into some more
Let's do it.
advanced tactics.
Okay. So one tactic that the more experienced traders use is called arbitrage. And it's based on this idea that prices for the same asset can actually be a little bit different in different markets.
So it's kind of like finding something on sale at one store and it's full price at another.
Exactly. And remember how we were talking about Forex being a 245 global market?
Right, right.
Those tiny price differences, they can pop up just because of time zones.
Oh, okay.
Or just the sheer volume of trades happening all at once.
And that's where someone can really make some money.
It's the idea, yeah.
Yeah.
They can buy a currency where it's a little bit undervalued, sell it where it's a little bit overvalued at the same time,
Oh, okay.
and boom, profit.
Sounds simple, but
In theory.
I'm guessing it's not that easy.
No, it's not. You got to be super quick, and you got to have access to real-time data from all these different exchanges.
So you got to know what you're looking at and you got to be fast.
Exactly.
Intense.
Yeah. And then on the opposite end of that, you have day trading, which the guide kind of describes as the highest stakes game.
The analogy they use is driving in rush hour traffic at high speed.
Yeah.
That doesn't sound relaxing at all.
Not at all. Because you're basically making a bunch of trades in a single day, but trying to ride those tiny little price waves up and down to make a profit.
Okay, so you got to really know what you're doing.
On top of it.
Now, the guide also mentions these secondary markets.
Yeah.
Which sound a little bit different from that direct currency trading
They are, yeah.
we've been talking about.
So secondary markets involve these financial instruments that are derived from something else, like an underlying asset.
Okay.
For example, mortgage-backed securities.
Okay.
They're basically like bundles of mortgages all packaged together.
Okay.
And sold to investors.
So it's not trading currencies directly. It's trading these products that are based on
financial products.
Mortgages or loans, things like that.
That are tied to those things, yeah. And they're really important because they provide what's called liquidity to the market.
So what does that mean exactly?
Well, the guide mentions Fannie Mae and Freddie Mac as major players in this. So they buy these mortgages from banks, which frees up more money for the banks to make more loans.
Okay.
Then they package those mortgages all together and sell them as securities to investors.
It's like a giant
mortgage
program. Keeps the money flowing.
Keeps things moving, yeah.
Okay, that's pretty interesting. So we've got arbitrage, day trading, secondary markets. It seems like there's a strategy.
Yeah.
There's definitely kind of trader and risk tolerance out there.
Yeah, and that's part of what makes Forex
so
interesting, right? There's so many ways to approach it.
Yep.
But maybe before we get too far into all the fancy tactics, let's just take a step back and make sure we're solid on those fundamental concepts.
Yeah. Back to basics sometimes.
Yeah.
Back to basics.
What are some key points that we want to...
Okay, so first of all, Forex is global, 245, prices are always changing. So that means opportunities can pop up anytime.
And that's what makes it so volatile.
Yeah, but also potentially
very profitable.
Profitable.
Right.
That's why understanding these currency conversions is so important. Being able to quickly and accurately
assess the value
when they're changing by the minute.
Yeah, when things are moving so fast.
Exactly. And remember those cross-rate notations?
Right.
Like XXYY?
The guide uses...
Yeah, they represent.
Yeah, to show how those currencies are paired.
How they're paired, right.
And it seems basic, but it's really fundamental to how Forex trading works.
Absolutely. And then you got appreciation and depreciation, which describe how those currency values change.
Based on what's happening.
Based on the market.
In the market. And then, of course, devaluation, revaluation, which are those government-controlled changes that can really shake things up.
Yeah. Those can create huge opportunities if you're prepared.
For those who know what's going on.
Exactly.
So we've got the global nature, constant fluctuations, currency conversions, all these different factors that can influence the value. What else do we need to get? Well, we got to talk about the people involved, right?
Yeah.
So you got your market analysts.
Yeah.
They're the ones trying to make sense of all the economic data, political data,
right.
to make predictions.
All the things happening in the world.
About where prices are going to go.
Right.
And then you got your chartists.
Okay.
They're the ones using those candlestick patterns.
Oh, okay.
And other tools to kind of visualize where things are headed.
And, of course, we can't forget the brokers.
The brokers, yeah. They execute the trades, give you access to the market.
Yeah, so it's important to remember it's not just like you out there on your own. You know,
not at all.
There's a whole
system
in place.
Yeah.
And that's just the trading side, right?
That's just the trading side. We haven't even talked about
risk management too.
Risk management, right.
Limit orders.
Those are like the safety features.
Yeah. Right, kind of like airbags.
In your car.
Like a target.
Trying to prevent those accidents.
Okay, I like that.
And then you got stop loss orders, which basically automatically close a trade.
Okay.
If it hits a certain price.
So even if you're not
so even if you're opting it all the time,
you're still protected. Okay, that's good.
You're still protected.
That's reassuring.
Yeah, it is.
Now, the guide also mentions this discretionary account.
Right.
Which sounds like you're really handing things over.
It is. It's basically when you give a professional trader the power to make decisions for you, you're basically saying, like, here's my money, you do it.
Like you're hiring a chauffeur.
Yeah, exactly.
For your financial portfolio.
Yeah. You're just enjoying the ride.
Okay, that's interesting.
They're doing all the navigation.
So for people who don't have the time or the expertise, that's an option. Okay, so we covered a lot of ground. Back to the basics. Arbitrage, day trading.
Secondary markets, these discretionary accounts.
Yeah.
It feels like we've just scratched the surface.
Yeah, we have.
This market is huge.
But hopefully this gives you a good...
Yeah, this is a good jumping off point. You know, as we're wrapping up here, one thing that really stuck with me from the guide is that whole thing about Britain potentially adopting the euro.
Oh, yeah.
I mean, that's
a
huge deal if it happens, right?
Absolutely.
Yeah.
If Britain actually switched to the euro, it would have a massive impact on the entire Forex market.
Yeah, it's like someone just changed the rules of the game.
Right.
Like halfway through.
Right in the middle of it.
Traders would really have to...
You have to adjust quickly.
So what would that even look like? I mean, the pound...
So the pound will be gone.
Gone, yeah.
From the Forex market.
Right.
Which could mean a big surge in demand for the euro.
Right.
Which could shift the balance of power. So there'd be opportunities there.
Oh, yeah, for sure. But also what?
But also risks.
Oh, because
the guide doesn't really get into specifics of how this would all play out.
Yeah, it's more of a...
But it definitely makes you think.
Yeah, it's a what if.
What if.
Yeah. So one thing that might happen is the euro gets a lot stronger compared to other currencies as that demand goes up.
Right.
And that would be good news
okay.
for anyone holding euro-denominated assets.
But then thinking about it from Britain's perspective, if the euro gets stronger, doesn't that make imports more expensive?
It does, yeah.
So that could affect...
And that affects their economy, which then could in turn affect the value
so it's
of the euro. Yeah, so it could get pretty volatile.
Yeah, it's like a domino effect.
It is, yeah.
So, yeah, it's definitely something to keep an eye on.
Definitely. And that's what I love about Forex, you know? It's always changing.
It's so dynamic.
You never know what's going to happen.
Yeah, and I guess that brings us back to that whole idea of...
Staying informed.
Yeah.
You got to know what's happening in the world.
Yeah.
Because it can affect those currency values.
Right.
In a big way.
Well, I think we've given our listener a lot to think about today.
I think so.
We've covered the fundamentals, arbitrage, day trading, secondary markets, those discretionary accounts.
Even touched on... a big potential global event.
That's right.
So I feel like we've
a lot to digest.
Done a good job with this deep dive.
I hope so.
But the journey doesn't end here, you know. Forex, it's a journey. It's not a destination.
It's a marathon, not a sprint.
Exactly. So keep learning, keep exploring.
That's right.
And thanks for joining us.
Thanks for listening.
On this deep dive into the world of Forex. We'll catch you next time.